Thank you for joining the webinar today on the topic how to trade level 2 order flow, particularly along with price action. The reason is that it's two different strategies, but when we combine together, it helps so much better. Not only the direction you want to trade, also it's going to help you in terms of perfect entry and exits and the trade management, everything. We'll focus on both together so that you can work together as well. Before you get started, please understand the risks involved in day trading, uh, because most of the traders, the two beginner traders coming in, they don't expect what to, how risky the market is. They expect to see some profit right away within a weeks of getting started. But if we ask the traders who've been trading for years, they know almost like 90%, almost 95% of the traders who lose money in initial 1 year or 2 years. That's why it's very important to understand the risks involved in day trading. Do not trade the amount more than what you can afford to lose. Also, look at CFTC rule, all the hypothetical simulated performance that we share based on historical. There is no guarantee it's going to repeat in future. Also, this presentation is not to sell any security products, anything, purely on the educational content. For a full disclaimer, please visit buysideglobal.com/disclaimer. While in the presentation or after the presentation, if you have any questions, please feel free to reach us at email or phone call. Phone call we prefer during we will be able to answer only during business hours. But email, drop the email. We'll get back to you as soon as we can. Maximum it will be like 24 hours business days. Email info@buysideglobal.com, or you can call us during business hours 435-659-8581. Okay. Um, but before we get into like how to trade the liquidity zones, all those things, I want you to understand first of all why level 2 and then why it's so powerful. I say that all the time. Institutional traders, almost 99 to 100% of the institutional traders do not trade without the liquidity, do not trade without level 2. But on the converse, it's really frustrating point is almost opposite happens on the retail side, meaning when 100% of the traders institutional side always use level 2 as their main focus to decide the trades, but retail traders that don't even have access to level 2, they don't even get level 2 access, they don't even look at level 2 data, they just trade based on the historical charts. When I say historical chart, when you open the chart, all you see is the price, what happened until this point in second, and then you look at your crossover, look at the bouncers, you look at all the things what happened in the past, and then making the decision. That is little bit on the bigger difference between every trader wants to become a trade huge amount, make a huge profits like institutional trader, but the problem is they don't use the strategies, they don't use the way they use every single day. Okay, so to understand why and then the power of level 2, I want you to go back and explain you the pricing auction theory, because the whole market is a bidding process or pricing auction happens every single microseconds, right? So when you say price is moving, price is not moving back and forth just like that. It moves based on the market auction process. There are bids, there are asks, there are like a market buyers, and then like a, who is market price is matched on the bids or ask. But to explain this little better, I want to go back to how the typical housing market works. Okay, so if you understand this at the lowest level, then you'll be able to understand much better on the stock market level or in the futures market. Okay, so what I have here is how typically your housing purchase process works, because when you, let's say that you wanted to buy a new home, you're looking for the better house that you want to buy, and then you go through the listings in the market, you find a better house to buy. um, let's say you found a house and then it looks beautiful. That's your dream house, and the seller asking for like let's say $500,000, right? So the question is from this point you have to decide whether you should buy this house at this price or ignore it. And this is what the decision you have to make. So we rely on typically the realtors. What the realtors do is like they look at historic information, right? So like you do in the level one charting, you look at all the historical data, moving averages, everything. They will look at, um, they'll tell you like, Mr. Buyer, for this kind of house, this much square feet, this much bedroom in this neighborhood in last 6 months, like let's say 20 houses sold and the average of this much price, and then they will let you decide. So everything is based on how the market purchases was made in this historically in maybe the last 6 months or 1 year, and then they can give you some guidance. And then you can decide, okay, so $500,000 is a fair value, then I'm going to offer $500,000, right? So the problem is you are looking at in terms of only the historical data. You don't know what it is. So the question to you is the $500 the seller asked, should you agree as it is? But you don't have any information. That is current market. You have to make your best guess whether you have two options. One, you'd be okay to let the house go if your offer is like much lower. So in that case, what you are going to offer like at least $500,000 or like even lower it to 450, and then see, I'm going to offer. If it gets, it gets. I will happy with it. If I don't get, never mind. I don't worry. So if that's the case, you can do whatever you want. But if you really, really love that house, you are really wanted that house, what are you gonna do? You're gonna increase the bidding to, let's say, 520 or 530 to make sure you are the highest bidder. You're gonna get get the house. This is typically happens in the market right now, right? So when you traders trade at the limit orders and then the market orders, I'm not talking about the orders that you and me make, like one or two contracts. Absolutely not. I'm talking about the higher participant, institutional, or like a fund management, ETF management, how they purchase the stock or a ETF. They buy at higher order volume. Think at that perspective. You got to stop thinking for a second how you and us trade at one or two contracts. Think about the high concentrated buyers, how they trade. So they have to make the decision. I already make the decision. I want to buy the stock. We need to buy it no matter what. So at this stage, you have no idea what is the best price to make sure you get the house. What are you gonna do? You're gonna make some decision based on historical. But let's think for a second. Let's think for a second. In the instead of that, let's say the inside information of how many buyers placed the offer already placed the offer to the house, which you will never know, because you as another buyer, you will never know what other offers already the seller got. Let's say that in this hypothetical situation, seller already have another offer at 520 on another buyer already offered 490, another buyer at 410, another buyer already at 550, another at 510. So this information only seller knows, because he already keeping track of all the bids, and then he's going to make the call eventually, right? This is how the market works in real estate. So this is what we call it as level two information. What is the bids and offers in the market active right now? This is the most valuable information. Okay, let's think for a second. What if you know this information before you place your offer? So in this case, do you think if you really wanted the house, would you still bid at $500,000? Absolutely not, because you can see already the bid at 550, the maximum. No matter what, any offer that you place below 550, you're going to get rejected. So, based on the information, you will raise above 550. Be smarter, since you know the information. You're going to make it exactly like 551, right? So, let's think about the converse. There are no bidders. Sellers is asking for $1,000. There are no other buyers. This is all empty. You are the only one interested, but you don't know that. If you don't know that one, if you offer $500,000, he's going to take it right away. But if you know there are no buyers interested in the house, You could offer like even 450 or 430. It doesn't matter. If the sellers are desperate, they're going to take it. That's why the information that you don't know, the current buyers, current bids, current offers, the market is very, very important for you to know. If you have that information, that'll change your whole uh, purchase process, isn't it? I just want to make sure everybody able to get what I'm trying to say. If you have more interactive or more helpful for me to make sure you get the point I'm trying to make. Say yes, no, I don't understand. Please type something in the chat so that I can make sure I'm on the right track. Okay. So being that said, the way you're trading, you are trading the same way in terms of this is what level two I'm talking about. This is the bids and offers. While the market price is moving, this is the stack of bids at every price, how much buyers are, how much contracts are pending, limit orders are sitting in the market. This is a DOM view. DOM view is nothing but you can see the price aggregated at each price level, each quantity. But level two, I mean, not this one. Let's go back for a second. So on the level two, you'll be able to even see at the exchange level. But instead of that, this is what you trade. You don't have a level two. You don't look at those numbers. You just look at the historical pricing data, and then you are trading those things. I wanted to go back to the housing explanation that I gave you. Understand, knowing the pending orders, knowing the how the orders are coming into the market. We are living in a golden age. Think about the traders who traded like 30, 40 years ago. They looked at the newspapers, and then they did have the information, the fast delivery, everything what we have. Even those days they made a lot of money, but how did they make it? We'll never know. But for us, we are living in a golden age. We are able to see, think about, we are living in an age where we are able to see, like your order, everybody's order, from no matter what exchange they are traded in, everything up to this particular microsecond, we are able to see in one single view how many buyers are interested at what price, and everything we can able to see. This is what dictates the next price move. Okay, this is something you need to understand. The pricing pressure, the buyers pressure and seller pressure, what happening right now, that's what dictates the next price movement. Price does not move up or down based on what happened in the past. That's why institutional traders always look at level two. How many orders coming in? How many orders are at what price level? Which side is more concentrated? Which side is more? Is it more buyers or more sellers? That's what they look at, right? So, but later traders don't even look at those things and then just trade based on the past. So that is why it's very important for you to know. How about you combine both together? Because market is continuous auction process. Every single bid, like I said, the one house purchase, right? But that's very, very simplistic way of explaining things. But in the real time, in the market, continuous bidding process and bids coming in, asks coming in, and sometimes market order coming in, everything exchanges make sure they have the right price at execute at the right time, everything. That's why you need to know how much pressure building in the current order book, also what happened in historical pricing. You combine both in terms of level two information plus price action, what happened so far, combine together, you'll be able to see much better flow of think about the auction process. That's what my main point is. If you don't think about auction process, then you'll be searching something in the real dark. Okay, so I told you just now, I explained in terms of level two is the most critical information that you have to trade. But the question is, the DOM on level two is lots of numbers and numbers. It's changing really, really fast, and then we cannot really make a decision that really fast. Even though it's very powerful, institutional traders, some of the tools they have, but we don't have. That is, they just build algorithm to see the insights, see those things much better way instead of looking at these just a DOM or a level two, because this is very hard to trade. That's why. That's why we built the system where it built the algorithm to see where exactly the most important high concentrated the order flow that you need to be focused on. So we call our indicator is BSG liquidity zones. It's a level 2 indicator. If you want to use the indicator, you have to have a level 2 subscription, and then for every instrument we'll provide the settings so that you'll be able to see um, where the highest concentrated liquidity zones are, and then which one you should focus on. So in the screen where you can see there are two different shades here. On the buy side, there are order flow coming in the blues. Usually those are we should tend to ignore. The reason is that when the algorithm decides the particular order flow is something really strong, then we mark those order flows in green on the buy side. On the sell side, same way, when the a lot of order flow, like you said, a lot of order flow keep coming in, but any order flow that we think is algorithm finds it's much more powerful order sitting out there, be careful. Those orders are marked in red on the sell side. So red and then green, that's what your focus should be. Ignore the other order flow that's coming in. Okay. Being that said, I wanted to tell you one thing. A lot of retail traders make a mistake. So we heard this term again and again, but if I tell you that's completely wrong, when you look at the market, um, you'll be you will not be able to agree. But I wanted to show some of the proof. The statement is when there are more sellers coming in, you have been told the market will move down. Okay, let me repeat that again. When the more sellers coming in, more sell orders coming in, the market will move down. Okay, that's what you have been heard so many times. But what if I tell you that's not the case all the time? That's not the case all the time, but I can even tell you when that will be true and when that will be false. The reason is that that's what we're going to use in level 2. Okay, for example, anytime the market always, okay, I think I have that in the next slide, I think. All right, so before going to the actual data that we have, I think I wanted to mention that as a day trader, I think no matter what kind of information we have, we look for repeatable patterns, right? Repeatable behavior. And then when the repeatable behavior is keep happening again and again, we expect when about to start, we enter the trade and then we may make our money. That's things are. So what I'm going to show you is tell you is how the level 2 reacts, the impacts of pricing. In this case, you can see the more sellers are coming in at the red here. Look at the instead of the price moving down, look at the price is always goes up. You can see the greens are less, greens are buyers are less, but the sellers always is growing more and more. That behavior you can see in the market day in day out. The way I have seen almost every single instrument is like when there are when the market is trending, you will see more and more high concentrated liquidity zones, more concentrated sellers coming in to take the orders. So in other words, the breakout trades are the most effective trades on the liquidity zones um, on a trending day. For example, when the market moving up, you are not looking for the buyers to take. You're looking for the strongest liquidity zones. Once it breaks, that's where your opportunity comes in. And also you can see whenever the strongest liquidity right here, you can see in the single place you might see a lot of liquidity built up here. When the price break through, the sellers coming in, buyers coming in, right? So this behavior of every time the market trending, always you will see more sellers coming in, and then eventually a different liquidity make it like a push it down. In this case, what I'm looking for is that every breakout opportunity, every time the strongest liquidity is broken, and then based on price action. Okay, I'm going to talk about price action in that case a little bit couple of slides later. The reason is that once the price broken on liquidity zone, the price action is very, very important, whether you're taking long trade or short trade. Okay, I want you to watch some of the price action. Look at what happened to the price action on the strong liquidity zones here. Break it through, continue, break it through, continue. Look what happened price action on this particular liquidity zone. It reversed. So there are three different price action that we teach our customers in terms of liquidity run, liquidity bounce, and liquidity sweep. Liquidity sweep is one of the things people don't even know how to trade, but with level 2 information, you can trade that much better way. I don't want to spend too much time on one liquidity sweep and run, but all I want you to focus right now in terms of, I want you to focus what happens to the price action every time the price breaks through and the price bounces. Okay, the trend continued until it reverses. Every time the bounce happened, there's always a liquidity zone, always a liquidity zone, right? So let's look at, okay, we talked about this one a lot. So in this case, now instead of numbers, I see a lot of lines right now. We call them liquidity zone. How can you trade those kind of liquidity zone? So that's why I want to talk about not only the power of liquidity zones, power of level 2. I wanted to show you some of the simple ways you can trade as well. Okay, so let's back to the same chart that we had before. So number one, we always seen again and again, price always move towards the high liquidity levels. So you can see every time the price moves, it moves towards the high liquidity. In this case, when the market started right here, you can see where the market goes towards high liquidity area, towards high liquidity, towards high liquidity. Once the market goes, the liquidity was exhausted right here. Now it moves towards the high liquidity on the downside, right? So remember that market always move towards a high liquidity zone. Okay, I can always mention price once it reach the highest liquidity. Yeah, on the on a trending day, the price eats all the high liquidity limit orders and continue to run until the final powerful liquidity order stops and reverses the run. So that's why we talk about in terms of the price action. You have to watch the price action every time the liquidity zone is broken. Is it reversing? You can see all these liquidity zones taken, but eventually one final liquidity zone making the price move. It happens both ways. It happens both ways. Okay, so in that case, you can ask the question of what happens on a choppy day, because we have almost more choppy days than trending days. So will the liquidity zones is only work for trending days, not choppy days? Absolutely not. Choppy days are even more fun to trade with liquidity zone than trending days. The reason is that market, we know choppy market means it has its range, is going to bounce back and forth in this range, right? But when exactly it bounces, when exactly it moves on, you will never know on a normal charts, except if you lose liquidity zone. So this is one of the charts that I have on such a choppy day. All day it's choppy. It's like sideways market. But I want you to notice something in terms of, this is we call it as liquidity sweep. In terms of it went up, took out all the liquidity and then bounced, because every time there is a liquidity sweep, every time liquidity sweep happen on a choppy day, you can blindly take a trade. The reason is that liquidity sweep on a choppy day always reverses. So liquidity sweep is nothing but price moves, crosses, that breaks out that liquidity. That means it takes out all the liquidity, and then the liquidity is vanished, it's gone. It tried to go back to its original state. Okay, again you can see that one more time here. Okay, but what happened to liquidity? Look at the liquidity was very concentrated, very strong. Eventually it slowed down. There is no liquidity here. Do you see this one? Eventually liquidity is completely lost. You can't see that in regular chart. You cannot see that in regular chart, right? So we always, okay, so J is choppy, I don't know when it's come out of the range. You will never know in a regular chart. But if you look at the level 2, it can tell you not only where and why. Why the liquidity was very strong here. It was liquidity swept, pushed it down. By the market went back to the range, liquidity started building. Liquidity started building again, same place. Okay, my price went back again, took the liquidity out, pushed it back. But this time, liquidity is all gone. There's no liquidity zone left. Look what happened to the price. Look what happened to the price. This is why liquidity level 2 is much more fun to trade on a choppy day um, than the trending days. Of course, it's much easier to trade. Look for the breakouts, look for the pullbacks, look for the price action. But on a choppy day, a lot of traders struggle for scalping. But when you look at level 2, it's much have better clarity in terms of why it's bouncing on the edges, and then when it does not bounce, it breaks through, why it's breaking through. You will see much better clarity on those things. Okay, any questions so far? If you have any questions, please um, type your questions on the section. I'll be able to answer while this presentation or end of the presentation. Okay, now we talked about how level 2 impacts your pricing, moves everything. Let's talk about in terms of how price action, right? So price action is very much important. The reason is that I told you that's a long trade. Every time breaks out, moves, it's a long trade. But where exactly you will enter, where do you keep your stop, how will you exit? That's a question you need to ask. Level 2 is going to give you the perfect trade opportunity, but when you have to still make the decision in terms of what is the exact entry price and then what is the exact stop loss. All those things still you have to make. That still you could make a mistake, right? So that's why it's the combination of liquidity zones are given to give you opportunity, and then supply and demand price action is going to give you the exact entry and the exact stop loss that you can start with. Okay, so same day, same chart. I wanted to show you. Uh, I usually trade with two different charts. One liquidity zones, and then other chart is our supply and demand indicators. You can see in terms of every time the price breaks out. I think let's go back to the same chart. You can see in this chart right here, the price was breaking out from here, right? So same thing. Um, I wanted to note the exact timing. Okay, so when I say timing, the way to compare these two charts is like this time right now. It is what it's like 9:30, 35. Look at the time below. So when this breakout happens, you will not know when exactly you can take a trade. But if you look at our other chart, it will be marked as a signals, breakout signals. And then when the price finally returns, not only the I wanted to go back to look at it. During this whole move, there are pullbacks. You tend to exit those trades. But if you use our price action chart, the supply and demand, it will look like smooth move. It does not deceive you or does not confuse you by those pullbacks. So it's going to give you until the end. Okay, so that's why use the information to decide the trade, which side you want to take, which exact price point, but exact trades and the stop loss is below the zones. That's why you have to have both together to make your trades. That's why we call it as confluence. Confluence is nothing but when two different systems gives you the same answer, same direction, same trade, same exact price point for you to enter, then it's a better confluence. When two different systems, one trade says go long, other says I don't know, other system says is go short, that's completely contradicting. You tend to ignore those entries, just ignore it. So confluence is by definition in day trading is you use two or more different strategies. If all the strategies agree with the same entry point, same kind of direction of the trade, then it's a better confirmation, like you getting your doctor's second opinion for the most important surgery. So again, my point is use the level 2 to make the decision, but use the supply and demand indicator of our trading signal system, price action system to have the exact entry and then exact stop loss, and also makes you keep in the trade while the final reversal happens. And also you can see if you go back here, when the buyers switching buyers to sell sellers, even those you'll be able to see those trades, sorry, those trades as well in the price action chart. You can make an advantage of. So again, you look for, okay, there's a signal here. Yeah, what does the liquidity zone say? Did we cross our liquidity zone? Did we break it out? You got to look at those together and then make the decision. So when you combine these two, you'll be able to filter the signals from liquidity to level 2 and level 2 in opportunities to here. Look for both ways. You'll have better odds in terms of your trade opportunities. Okay. When it comes to liquidity, I think there are three most important concepts you need to learn. That's called liquidity sweep, run, bounce. I don't have enough time to talk about individual, but we'll send the video once you purchase the product. I'll send you the video on what it is and then how to trade those things. Okay. Okay. So before I end the webinar, I wanted to show you some of the examples from a recent liquidity chart so that you know in terms of how powerful is that, so that you'll be able to make the decision this weekend before our offer expires. This is ES on July 18th. That is what, Thursday. Okay, so I want to take a look at in terms of how the pricing um, impacted when it price broken went down. But look at this particular bias; it could not break through, and the price tested twice. We call it as double bottom, whatever it is, tested twice and then eventually pushed up. And also, I wanted to notice, look at how much order flow stacked up at the price 56, 16, 17, 18. Compared to these lines, look at how much concentrated these sellers are. Look, it started here around like a 12 noon and then started building up. Building up. What happened? The price went always exactly there, could not even touch it. It reversed and then price completely reversed from there. Without this liquidity zone, how would you know there is a huge order flow, liquidity zones building up that is going to push the prices down? You will never know, right? That's why you always look at level 2, look at the level 2 order data, market data, how many limit orders coming in, how many sell orders coming in. You need to look at those things, okay? And then let's look at another day in ES as well, because some of my favorite trades, some of my, if you look at any of a webinar, I always look for breakout trades and then retest, breakout and retest. When I say breakout retest, you can see the market was bound between these sellers and buyers area for a long time. Eventually, it got broken. Not only broken, the price pulled back and retested. When we there is one screen I show in all the webinars, which is same price, buyers became sellers. You can see that particular setup. This is my favorite setup. Buyers broken, price moves down, and then sellers start coming in the same price level. Those are the opportunities I always take the trade. You can see the setup right here. One, number two, second setup right here. This is my another setup in terms of there. And third, look at this, buyer broken, sellers coming in the same exact price. Okay, so once it reaches that level, you can see the market went all whole sideways. Again, look at this, price went up, swept, went down. This behavior you can see repeatable again and again and again every single market. Okay, some of the questions you may ask, is it work only in ES? No, it works every single instrument, every single not only futures, it also works on stocks. So let me show you some of the examples as well. Okay, this is NQ on July 18th. I want you to look at in terms of how the pricing was bounced, and then liquidity sweep here, bounce right here, and then liquidity sweep right here, and then breakout right here. Those behavior, even though it's a choppy day, if you follow those kind of patterns, repeatable behaviors, you'll be able to see those trading opportunities. Okay, and this is NQ in terms of same thing we talked about in terms of market started with the range. Once it breaks out, really breaks out, and then every time the liquidity started building up, it's keep on sweeping, keep on building those things. It bouncing and bouncing. Sellers taking out the market. There are no buyers. There are no greens below the pricing. That means the sellers are taking out the full control on this day. Okay. Um, we talked about ES. We saw. I want to show you the crude as well, because crude is another another instrument that's making a very good run last 2 weeks. Yeah, when it moves, it really moves. That's why I want to show you this as well. So again, like I said, when the market trending, it's breaking out every single opportunity. When eventually it reverses, I want to look at the most concentrated buyers start coming in. You see this one? Look at what happened with most buyers coming in. The prices went up, broken, bounced here, eventually broken, broken again. Eventually, this liquidity here was there since morning. They pushed it down. So you will initially you will be like a little bit confusing in terms of a lot of levels. That too, that's why I ask you to pair up with the price action, and here look for the three opportunities that we always train on: liquidity bounce, liquidity run, liquidity sweep. Those are the better opportunities you can take almost every single day in any instrument. And then this is another crude trade. Here I wanted to talk about in terms of there was liquidity here. Once it broken out, it went up, and then once it swept, pulled it back again. It swept this liquidity, pulled it back, bounce on the liquidity zone, bounce on this liquidity zone, swept this liquidity zone, bounce liquidity. It's like happening again and again and again, same trade setups. Okay, that's why I'm saying all you need to learn is three setups: liquidity bound, run, and then sweep. That will happen again and again every single day. Okay, so uh, we talked about the ES, NQ, crude. Why not some stocks? Let's look at some of the stocks as well. Okay, so same way when the market started, there were like liquidity zones on top, liquidity bias on this one, and then it was swept the liquidity here. It did not continue to run. Price action reversed, and it went back to the range. Okay, but eventually this particular liquidity zone, even though it was rejected once, uh, eventually it got broken. It took the prices up. It got rejected here. But once the rejection happens, I want to look at the sellers started constant coming in exactly at the same point. The liquidity zone, like it started building up. Look at the price action. What happened? Look at the price action. What happened? Okay. If you're looking at the chart, you will never know in terms of what kind of pressure, selling pressure is building up here. But only looking at the level two data, you will see those kind of actions. All right. Let's look at the Tesla one more day and chop it as well. Again, this was the range: top liquidity, sellers liquidity, buyers liquidity touched, taken out, completely gone. Again, this is the same place. Again, we went back to same kind of the previous stronger zone we have, and it touched. It could not go through much higher. Sellers are building up again, push down, broken through. I want you to watch the action, exact actions when it breaks out, when it touched, when it breaks out. That's where opportunity. I don't want you. I don't take trades anywhere in between. I take trades at the edges when the liquid. What happened to the price when the price goes to the extreme um, liquidity zones area? That's where the real opportunity is. Okay, it happens for any instrument. This is again Nvidia because that's another stock that's making a very good move in terms of last 2 weeks. But I want to show you the choppy day on the Nvidia as well. In terms of once it's broken, retested the same place, price moves up, and then when you even on a choppy day, it exactly went back to the exact liquidity zone buyer side, push it up. Okay, let's finish with the Apple in terms of because I wanted to show you that even the scalping is possible on the stocks as well. The whole during the day it was like I said, my favorite setup was broken sellers coming opposite zone, broken sellers coming in. Right, those are my favorite trades. But even here, look at those things. Taken the liquidity, pushed it down while the price is going back to same position. Liquidity build up again. What happened? The prices went back up. Taken liquidity one more time. It's gone now. Prices going down. Liquidity built up again. It went back, pushed down. Since the liquidity is lost all its strength, price moved up again. Right. So this behavior is something happens again and again. I want you to get the system and then just monitor the level two price actions couple of months. You'll be able to start building your muscle memory in terms of what's going to happen most likely in this liquidity zone, because everything needs a practice, everything needs your muscle memory to build up. So that's why you need at least some time to learn, practice those kind of trades with so level 2 supply and demand and price action together. We will give you the best tools for you to where you can expect the action, and then the videos to train as well. My point is, stop trading based on moving averages, RSI, MACDs, those things. I'm not saying it won't work, but those all just uh, based on historical information. It helps to some extent, but it will not give you what's happening in the current market auction process. That's what decides the next pricing move. People mistaken always like only retail traders now. Moving average, moving average has crossed, and then price is gonna move now. No, it's not like that. Moving averages happened because price action already moved. It's delayed, okay? And then same time, RSI will never tell you when the market will lose the strength or when it's going to continue or reverse. All those are historical price action already happened. So that's why you need to rely on the actual order flow in the market level 2 to make the decisions much better way. Okay.